All right, we are live. What's going on, everybody? Hope everybody had a good trading day today. A little bit of a crazy day today, right? I mean, let's go back and look. We talked about this Sunday night, last night, and gosh, feels like Sunday night was like a week ago already. But yeah, today was pretty wild. You know, we had futures were way down. You know, lots of cool comments and everything in the Twitter stream. You know, saying like, you know, not very reliable, you know, and we'll probably end up green, and we did. So you guys nailed it there. But you still got to respect it, and you know, just watch the direction of it, and you know, look at your trend lines off of the futures, you know, and see where you go. And so today was pretty wild, right? So we were futures were down huge, and look, they're down again too. So we'll see what that means. It is possible, right, that we could go down further this time, right? Because why not? Like, I bet you a lot of people went in long today, right? Nice, you know, kind of bullish setup today. Lots of bullish setups. We just went through a bunch of charts on Twitter, you know, and you could see, you know, a lot of those bullish setups. And the market loves to trap people into positions that they don't want to be in, and it's just crazy how it does that. But it's amazing. So it just makes you just, you know, continue to, you know second guess yourself and double think, and you know, and just get worried. And that is why rules are so important, right? And so you know, I catch myself breaking my own rules sometimes, and you know, I even did today. And you know, I don't want to make excuses. You know, I do, you know, work, and it's hard to do it from the phone, you know, but it's like, you know, if something looks good, it's, oh, let me jump in there, and then you're like, wait a second, I didn't check, you know, a couple different things. I didn't check where I was in relation to the VWAP. I didn't see where I was. You know, just, you know, sometimes you just do things and you're like, why did I do that? And then it never turns out good, right? So I did that. You know, I mean, you know, it had a good start to the day, and then, you know, then just, you know, got, what is it? I guess I got greedy or whatever the case is. But I was like, oh, I'm up. Let me try something else, and then just jumped in something. I was like, oh, why did I do that? So, you know, these things happen, right? So, but you have to be able to, you know, we have to be able to, like, you know, evaluate ourselves of what we did and what we did wrong, and that's the importance. And you know, I've, you know, stressed it before on Twitter, but you know, the importance of journaling. And hey, what's going on, Chris? You know, the importance of journaling, right? So if you have like a good day or a bad day, right, you need to write it down, and you know, we need to write down what happened, what went right, what went wrong. You know, what our goals were for the day, what game plan items, you know, of our own game plan, you can use mine, whatever, you know, worked, what didn't work. And it's a good place too if you're really frustrated, if you made some bad trades. Writing a journal is like the best way to just to get all those, the emotion out of, you know, what you built up, you know, during the day. You know, it's a great place to celebrate. You know, you could be like, oh man, it was awesome. I did this, I followed this rule, everything clicked, you know, everything lined up. You know, that's a great way, but it's also a good way to be like, hey, I messed up, you know, I didn't follow my rule. I realized I didn't follow my rule and stayed in anyway instead of just getting out, you know, and instead of taking a paper cut, I took a bigger loss, whatever the case was. You know, it really helps to journal that stuff and write it down. You know, you can write it down on paper, which is great, or you could email it to yourself. You could save it on Google Drive. You could, if you have a trading buddy, you can email back and forth, you know, and, you know, get comments on each other. But it's a really helpful thing to do, you know, especially, you know, if, you know, you had a rough day, or even if you had a good day. But either way, it helps to just to keep track of things, and you can go back later and look at it. That's why I like to do mine online, because I take pictures, you know, screenshots of it. I talk about what I did right, what I did wrong, and then it also prevents you from over trading too. Because if you keep a journal, you know, you don't want to write 20 different entries. If you took 20 day trades, you know, 3, 4, 5, you know, so maybe one, you know, is fine. You're like, hey, I took this trade. It was, you know, inside 60. In fact, let me do that real quick. You know, I had a chart request earlier. You know, really, you know, really happy to see that, you know, a bunch of people are, you know, most of you guys are doing all the good stuff that, you know, that you're coming up with, you know what I mean? So like if you do a chart request here, you know, I just look at it with you guys, and you know, if it looks interesting, you know, I'll put an alert on it and try to take it myself. But you know, if you guys are, you know, if I can help you, you know, look at something you guys are looking at, I feel really good about that, you know. So JRMP Trader, you know, I had a good trade the other day on NOC, and we talked about here, but it was all on him. So great job on that one. So another chart request. I did a few little bit of update here on McDonald's. I just want to kind of just take a look at that on Big Mac here. It's had a really awesome run here. I mean, I remember looking at a couple of these hammers and saying they're good, and it just keeps on growing and growing and growing. And finally, it's kind of paused a little bit here. So just be careful. It sometimes pauses out and comes back down. It might even want to come back down and test the monthly 5 MA, right? So just keep that in mind. Know where your bottoms are, where your stops are, and all that stuff. But here, it went inside week last week. Took that inside week to the downside at the open. Most everything went down, but it reclaimed it nicely, right? And it's kind of right in the middle of that range now. And the daily, is really strong. Put in a nice hammer, right? So just got to make sure that holds. And so I drew a new pitchfork here and used that as a pivot because the hourly, just pivoted off that corner, and it's looking pretty good. So did put in a inverse hammer here, a little shooter, at the end of the day on some volume. But we'll see, right? We'll see if we can take out yesterday's high and go from there. But if you have a stock that you like to watch, you can catch stuff like this where, look, this thing was down 1, 2, 3, 4, 5, 6, 7, 7 in a row is usually pretty much the end of the line on any sort of movement, right? So this one did 8, right? And so if you were watching this one, it did 8, and then here I just kind of want to go back into the rules. This put in one of my favorite setups, which is an inside 60 right here. So if I were stocking this, I would be thinking that this is going to reverse at some point here, right? Anytime you have 1, 2, 3, 4, 5, 6, 7, 8 red bars in a row, you're going to expect a green, right? And so here, we know the market, pretty much did a nice reversal today. So here you can see red bar and then put an inside 60 right here. And then with a top right over the VWAP. And so what you do is you wait until it breaks this right here. And then you could go long over that. And if you did that, that was worth $3 all the way into the close. So, options probably would have worked pretty well on that. I mean, let's say you did 185 options at 11:30. Let's see. Just today's 185s at 11:30. $185 at 11:30. Look at that. Could have gotten right here, 11:30. Even if you entered at the high, you would have gotten it at 86 cents, right? And then just wait till it broke to the upside, right? Open down here, right? Just because it's a little sloppy and all that stuff. Open right here, took it up. Well, you wouldn't have entered there. It would have opened here. You would have ridden it up. So you would have gotten it at 86 cents, and you could have taken that all the way up to, more than double, right? More than double on that. So more than could have doubled your money on McDonald's today, just on that inside 60 bar. So just something to look at there. So yeah, so definitely looking, pretty bullish. So, but we'll see. It might be trying to put in a little halfway pivot here, come down, come back up. So just, definitely keep it on the radar. So, like I said, it might want to test those, that monthly 5 MA before going up even further. So just keep an eye on it. But yeah, really good chart and really good job too on that. So today, just before we keep going, I want to talk about two things. So I want to talk about the 60 anchors, right? And I want to talk about Fibonacci lines. So here, let's go to, in fact, 5, put in like a double inside day, which is always good. And I haven't really traded 5. Gosh, isn't that funny? Like this stock is almost as much as Facebook is, But one thing to look at is on the Fibonacci's, and like kind of the one of the, I guess, the tricks or something like that would be to you don't necessarily have to do it. Like a lot of people just draw it from the top, to the bottom of some sort of high or low point and just go from there, right? And but that's not necessarily the best way to do it. You can do that, and it's effective. But another thing you could do is take your Fibonacci line and look for a key reversal bar, and then draw it off of the reversal of that in both directions, right? So here, as we, if we kind of zoom out a little bit, we look for some sort of key reversal bar. So let's see. So here, kind of pivoted here and then came back down and pivoted again. So we'll look for a pivot, a good reversal bar here. So went inside here and then put in a key reversal bar here. So let's say you start, off of that bar when it broke that bar to the upside. Oh, I did an extension. Was it just one just a regular, no, it's an extension, it should be fine. Okay, so here, and oh no, you always start up here. And then here, the reversal bar, it went inside and then reversed here. So let's say that was the entry. You go there, and then back down to here. So you take that candle and that candle, and then you look and see how it lines up, right? The other key thing to look at is the 50% line. You want that to try to get through a gap or a major bar. So here, I might consider lowering this a little bit. Just maybe taking the bottom of that bar, activate. And let's see, maybe the bottom of the inside bar. I want that 50 to just get inside that gap somehow. I might have to compress it a little bit. Let's say we go at the inside up, and then activate. So let's say it came here and then came it down. Let's say that was the reversal bar there. It really started to change inside and then down there. And now the 50 is through the gap. So here you can see, it came up, inside bar up, reversed, big bar here, and then went inside and then put another bar here. So I just did it off of this. It looks like a double inside bar. So that double inside down is usually really good. And so, so there's your point there. And then here, we just kept it, off of this, kind of this bar here. But it helps to have that go through a gap. Just something I kind of picked up. And then here you can see it's served as now here, resistance and then support, and then bounced up and then came back in, and now the 50 cut through the 50, and now this the 32% line has kind of served as a bit of resistance, right? And so then it came back down here, hit back to the 0 line again, which served as support, and now you can kind of see how this is all playing out. And so so 5 is going to be on our list for tomorrow, our game plan for tomorrow, for a double inside day, which, as we know, is pretty strong. So we know the strategy on that. I've got it posted on my Twitter pinned feed, so you can check that out. And anyway, ideally, we gap down a little bit, and then ride it back up through the range, right? And today's range was $5.76, and that would be a good trade on 100 shares, especially if your risk is only like $1, right? So it's 1 to 5 risk reward. So if we gap down, right, you would just put, and it started reclaiming the range, you just put your stop at the bottom of the range and then trade it through that range back to the upside. If you gapped up, we'd look at, trading it back inside the range. If we gapped in the middle of the range, somewhere in here, right, because this here shows your high and low. If you gapped in there, then you would trade it versus the VWAP, right? And look here, you go back to the rules here, had an inside 60 up. The high over that was 98.49 all the way up to 99.80. So you got $1 there, point there. Inside 60 here, could have ridden that all the way up. Let's see, $99 all the way up to 101. So that was another good $2. So you could have, just on 2 trades on this one stock today, just using those rules, you could have made 3 points, right? Then you saw another 3 points on McDonald's. So you can see just by having, trading off the 60s or just, following a set of rules that you can make money. You know what I mean? So you don't have to try to catch these huge bottoms or these huge tops and things like that. Get the mRNA. No, I need to get that on there too. Which one was that? Is it mRNA? Yeah, Moderna. So that was the one that after hours here. It was on the third. So this is that's a day 2. The 30 orb can also work on a day 3. So we'll keep it on the radar tomorrow just in case this thing decides to get some strength tomorrow. So that's going to be on the game plan. Stitch Fix. Yeah. So you guys know how to check. I think I've shown this before. Yeah. Kind of expected move here off of the implied volatility. If you guys have that, if you don't have Thinkorswim, but the idea is here. That's kind of what we're looking at in terms of movement. Now you can calculate this another way too. I believe you can add your prices of your in the money, or at the money put and calls. So where are we at? 25. Yeah. So $3.40 plus $2, so $5, and roughly $5, right? So it's roughly, that's your straddle price, right? So when you add your put and your call together, so you buy, you can just straddle. So you would do the ask on both of them. So you're looking about $5, $5.70. So on that. But anyway, so that's the expected move after earnings, and you could see it closed at $25, and magically it went up almost $5 at the open, or at the close after earnings came out. It actually beat on earnings and beat on revenue, but apparently their EBITDA data was not as expected, and then magically it went down, right? So whatever, they always say that after the fact. They come up with the justification after the price moves, right? So algos, whatever, pushed it whichever way it wanted to, and market makers moved it whichever way they wanted it to, grab some people out there, whatever the case was. But the point is, it still moved about $5 to the downside too. Well, almost. So it moved. It looks like a big move because that huge red bar, but it's only down, $3-4. So it probably might want to test that 21, maybe even the 20 level. And we go back out to the dailies. You can see it's got pretty strong support here at about this 18 to 20 level, and we're going to be gapping down here tomorrow. So it's possible it could take out a couple of those pivots here. Look, the low here was 18 to the tick. So I mean, maybe if it gets super volatile, you could see this last bar here after it gapped huge. Right, that range there was $6. So you could see it potentially taking out those pivots and then possibly putting in a reversal bar. So just watch the 15-minute orb on that one and see what it does. I don't really encourage reversals, on Twitter or anything like that. But if you've got the skills, you can attempt it. Just be careful; they're not as reliable as going in the direction of the gap. So just keep an eye on your orb on that one. And then finally, I wanted to talk about. The 60 anchors. Okay, so today, a couple things on the Twitter here. So yesterday, right, last night we talked about Netflix being a 60 anchor, right? What does that mean? Well, what it means is that it put in an inside 60. Now it could have been a hammer or an inverse hammer, shooter type deal. Any type of bar that's actionable off the 60 time frame. So if this bar closed here, that would have been a nice red, 60 shooter under the VWAP that you could have traded, at the open. But here we just look at this continuity of price, right? Even if we gap up or down, right? Give me 1 second, let me get some water. I promise, it's just water. Anyway, so so we got put a spinning top inside 60 under the VWAP yesterday on Netflix, and so today we we open up here right at the bottom of this bar, right? And I usually say within the first 60 minutes, but just like the orbs carry on, you could still use that as a point of reference, or you could have used the new bar as an actionable signal. But here you could have traded this to the upside, and that's kind of what I did this morning. I just scalped it. It was really hard to do with the options. They just didn't move very fast. So I made a few bucks on that. And then you can trade it back into the range. It's a little more advanced as it comes back. So anyway, you trade that to the upside. Boom, up there. And then it comes back in. You can trade it as it enters back into the range. And, you could see that, that would have, given some potential too. But it ended up closing up here, and then it came up a little bit, and then it went back down and flushed, right? And so Netflix. So today. Oh, and then QQQ yesterday did that too. We were talking about that a little bit on Twitter today. QQQ finished up yesterday with a 60 anchor that was also inside, and it was an inverse hammer, right? 60 shooter. And so here you can see this. It didn't quite break to the upside, and as soon as it really didn't break to the upside, you could have traded that back into the range here. A little more risky, right? But your stop is well defined. Your stop would have been right up here, right? And so you're really only looking at, so your high there was 162.76, and your entry point would have been 162.60. So you're looking at only 16 cents of risk on the Qs, right? So that's pretty good, right? If you think about it, so you could have traded that back in the range here, and clearly that retraced the whole range of $1.31. We're talking 1 to 10, basically risk reward, right? You're only risking 16 cents, and reclaiming that range was almost a full $1.60. Do you see what I'm saying? So that could have been traded that way as well. Broke down to the downside, and really was like the range here was $2, right? Full range after the risk, and then it went down even further too. So that really shorting that was a good trade. And then today, we're left with, and you can even trade those off of gaps, right? So if you gap above or below it, so here's Apple is going to be on the anchor list for tomorrow. Apple gave us an inside 60 to close the day, right? And so tomorrow, depending how these, look, the futures are already coming back up again. So who knows? We'll probably grab in the middle. We'll probably enter in the middle of the range. But let's say it gapped down, right? You don't want to chase these type of gaps down unless you're doing a 15 orb, which we do have on Apple tomorrow, because of well, it'll be a 30 orb tomorrow, unless there's a brand new upgrade or something like that tomorrow. But we'll see. So if it gaps down, you don't want to chase it down. Wait till it comes back in the range. You could try to trade that back in the range. Depending on how far down you gap down, you gauge your risk, right? So the range of this bar is $1.02. So, let's say we gap down a little bit here, like 168.77, and the entry would be 168.86, right? You're risking 10 cents to potentially make $1, right? So 1 to 10 risk reward. That's pretty good, right? To trade back up. Same thing if you gap up. You might want to trade it back into the downside, right? Or you see how it handles it, right? So you guys have seen me trade live on Fridays off of the 60 anchors. Sometimes you just get your foot wet, right? You just test the waters out a little bit. Buy one call, one put, and just see if it moves off of it. See how it handles. This way you've got some skin in the game, right? And you're not risking very much at all, and you can. Now don't do that on Google or Amazon, because the spreads are like $1, right? But with Apple, it's a couple cents, right? So you at least test the water out, see how it handles it. If it's not handled, if it doesn't want to test the bottom end of the range, then chances are it probably wants to go up, right? And you can see here the 5 MA is crossing over the 10 MA, right? Nice golden cross right there. So we're heading into some pretty bullish territory here, for Apple potentially. So. So just keep this on the watch list for tomorrow morning at the open, right? These anchors are a great way to trade, to manage the open, right? And so here I just want to show you. This was on Friday. We had an inside 60 anchor here, right, from Thursday, and we gapped way down, right? So it never got to test that gap. Now it filled it today, right? And you could have, well, I'm sorry. It filled it today. And you could have seen that potentially as we came off this pitchfork support, right? We didn't go quite inside, but we got over the VWAP here, and it was a bounce off of the pitchfork, and that could have been a good trade right there too. I've got a friend who caught that today. Don't know if you're online here, buddy, but anyway, so yeah, but just nailed that trade today, and that was a great trade, and filled the gap too. So and a bunch of people were talking about it too. So. Definitely some potential there. So anyway, so we're looking at this guy potentially to the upside. We'll watch a 30-minute orb tomorrow, and then we'll see how it trades off the 60 anchor at the open, right? So it gives you a couple different ways to trade this at the open. You've got the 30-minute bar when it comes in, and you can still trade off this 60 bar to see where it goes. And conveniently, the top of the 60 bar is also yesterday's high of the day, real close to it. So a break of that too could get some further momentum and possibly take out a couple of these bars up here. So. Hopefully that makes sense. This is the only one on the list, so it's definitely worth watching. I didn't get to catch everybody, let's see what we got going on now. Chris, how's it going, man? Chandia, really appreciate it. One day I'll work on some pizzazz and all that stuff with the videos, but here I just offer practical ideas that and just get to share some thoughts here, and we could all look at charts together and everything. So. What's up, Thalasi? How's it going, man? Javier, what's going on? The McDonald's request was a good one. It was a great chart, man. You picked out today, and if you were watching that today, you saw how that inside 60 just rocked to the upside. So, what's going on, Karhik? Good to see you. Shirley, how are you, as always? Yeah, Chris, how's it going, man? So, yeah, we were just talking about NVIDIA there at the close, so let me elaborate on that a little bit. So, you've got the monthly, right, still red, right, kind of in the middle of the range. But see how it's just kind of getting, keep on staying in the lower end of each prior month right now. The key is a couple months ago, is catching the tail fail on this hammer, right? Because it started out the month a couple months ago pretty strong, right? It was like, oh yeah, take the hammer up and all that stuff. Well, as soon as it reclaimed, it came back in that range, which is tradable, right? This whole range here, 26 points, and then it took out that tail, right? So it tail fell down, and from here, it's already down like almost 100 points, right? I mean, that's pretty amazing. Lower than 100 points from last month. And so, so yeah, so here we are, lower end of the range here. I did put in a 4-point day, but I mean, compared to 100 points, not huge. Still in the inside, lower end of last week, and today put in an inside day, albeit green. All right, so a nice green inside day. We'll see what it does tomorrow. Might kind of hang out in there. Maybe we'll get a double inside day. If we get a double, oh, sorry, wrong one, guys. Sorry. Here, different inside day. Yeah, so here, put an inside day. So we'll see tomorrow if it puts in an inside day again. That'll be really interesting, right? Because then we have some points of reference to trade. We got a strategy to trade the double inside day, and if it breaks to the upside, might see the median line here. If it breaks to the downside, might see it all the way back down here to, like, I've been saying 120, right? And it's right on this reaction line too. So I might want to just kind of get around here. So we'll see. We'll see what it does. It's been a tricky market. It's been pretty tough the last couple of weeks to give it a quick prediction. Yeah, and then finish with a shooter here inside. Basically a pretty solid reversal bar here. Not a lot of volume, but we'll see. You could use that as an anchor tomorrow, right? If it takes out that top, right, that would be a tail fail to the upside. If it takes out the hammer bottom, VWAP would be up a little bit in the morning, and then we'll see if it takes that to the downside. And it could, right? It's got a lot of range. It could take out boom, 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 and then all the way back down here. And like I said, could find its way down to, I know it seems like a long way to go, but here it is on the smaller scale, down to 120. That would be awesome. But anyway, so that's NVIDIA. And then I showed you, I tweeted this out earlier. I always tweet out the pitchfork off the hourlies. You can see here, there is we talked about MACD last night and RSI and stochastic. But you can see the MACD here is doing a trigger right here. MACD is crossing over the signal line. As soon as that crosses back over, if it can cross back over that zero line with authority, it's going to start getting really bullish, right? We've got positive divergence here. Positive divergence here on the RSI and stochastic. So we'll see, but it needs to get through this median line here, this pitchfork median line. If we could do that, then you could see, further up to 170, and if it breaks through there, then all the way back up to 190 to potentially fill this gap up here too. So, so there's NVIDIA, and surely you always have the best ones. I'm just gonna take whatever you put up there and just trade those every day because they're always awesome. Okay, so here's Dominion Energy. We talked about this one not too long ago, but it's been kind of been channeling up for quite some time, right, since the summer. And so it's been just kind of holding on to this kind of medium part of the channel for a while. Used that, and then it broke down, and now it has this up, down, up, down, up. So let's see. I think energy's been pretty good. Today I was kind of highlighting FE, which looked like it hit the top of its, or really close to hitting the top of its channel, but hit the top of its kind of rising wedge. So we'll see if that holds. This. We'll see. It's always your first target. So just trade that thoughtfully. Awesome chart requests. Appreciate it. Yeah, so just keep an eye on that when you're trading the, when you're looking for setups. Let's say you have a good daily setup. I mean, let's take, like, FE was like on the long radar today, right? So it was also on the short radar too, just depending on it, right? So when you have something, always look for other setups that could trigger the setup that you're really looking for, right? So on FE, we were looking for here the high hammer, right? So you can start seeing the guts of all these bigger bars as you go to the shorter time frames, and you'll start to recognize that. Be like, oh yeah, we're putting in a hammer today because we ticked down and then consolidated towards the top end of the range. And today, we did the same thing, right? So ticked down. And even though this is a thick bar, that's just at the end of the day, it's just price going through there, and then we end up at the top of the day here, with a hammer. So, so here, but look, this one we were looking at going long today if it was strong, right? Well, where was the point? The same thing with McDonald's, right? Here's your inside 60, right? If you go to the rules on my my Twitter feed, you trade the best 60 setups. Inside 60, nice inside 60 hammer over the VWAP, and you could have just entered here over 39 and 10 cents, and then traded this with a shot with your first target at breaking the hammer to the upside, right? And then, you could have potentially added there, or trim some profit and just kept your stop right below that level. And then if it came back in, you still would have made 39.10 all the way up to 39.40, and on a $39 stock, that's pretty good, right? Because it's not one you're going to trade so many options with, but if you got 1,000 shares of that, you just made $300, right, to get up here, right? Or $400. And then you have your stop here, and you held, let's say, like you took some off, you took half off, well, then you just make another 30 cents up there, so another $150. I mean, this trade right here could have been a $450 trade today. If you only trade options, no big deal, don't worry about it. But if you got shares, and you can trade 1,000 shares of this, just by trading off of here, trimming some, and then riding the rest back up. $450, $500 trade right there, just on this, just off of a game plan stock, and just by looking for setups intraday that can trigger your bigger setups, right? And so that's kind of the mentality of how to look at things. We've gone over that before live. Looking at what was it? Splunk a couple days ago. And Neo we talked about. So these are the type of things that you kind of look for when you're setting up your trades. So the perfect trade, of course, is like, hey, I want to take this hammer to the upside, so I'm going to enter here and take it up to the upward wedge point. You can do that, right? But you don't have as much room, right? So that's why we start digging into it and look for setups there. And yes, you can go to smaller time frames and do the exact same thing, but I will say this: the smaller the time frame you go, that's why I don't go much further, less than 15. The further time frame you go, the more risk you're going to have, right? Because you don't know relative to those bigger time frames, what it's going to take out. They're not going to be as strong. And I found in more volatile markets, the lower the time frame you go, the more risk you're going to have, right? Because look at this guy. You could have traded this. It's like, hey, look, there's an inside 15. I could have triggered that to potentially trigger the inside 60. Obviously, this was cooking the inside 60 here, but it's like I could have traded that to the upside and just have my stop right here. Well, if you did that, right, it would have come back in and stopped you out. And then depending on what your sizing was, if you did 1,000 shares here, you'd have gotten stopped out for, $120, and that's not fun, right? Then you could have had your stop down here, right? But, at the same time, well, that would have been essentially your inside 60, right? So that was the low of 38.69, and then low 38.78. So this was the next bar up. But either way, you see what I'm saying. So this was that low of that 15. But right, these 60s give you a lot of clarity. So, but you can see what happens as you go, deeper and deeper. But if you go to like the 1 minute chart, I mean, you're just asking for trouble, right? Because they can just fluctuate so much, and they can get volatile, and sometimes the spreads are bigger than some of the bars, right? So you just have to. That's why trading only stocks with good spreads and good liquidity is important. So hopefully that makes sense. But yeah, it's definitely a start to a very interesting week. I'm going to take it easy a little bit, just personally, just because I broke a couple rules today, and it's my fault. So those are the times. It's like when you're in the thick of things, you're just trying to if you're up on something, you're like, hey, let me just try another trade. It's like there's rules are there for a reason, so you don't get hurt, right? And so you got to set boundaries for yourself in trading. I'm going to do it for me too. And just talking about it here is like a good opportunity for me just to kind of talk it out and all that stuff. But it's really important to do that and to follow your rules. And so I'll take it easy this week. Not going to go crazy for the rest of the week. Had a good week last week, so just looking for the best setups and not trying to push too hard. Sometimes if we make mistakes, we have to slow down a little bit and just reevaluate. And maybe not trade for a day, maybe not trade for 2 days. A friend of mine sometimes doesn't trade for a week, just to regroup and watch. That's good patience, right? And it helps you come back recharged. And can start focusing a little bit better on the rules, right? On whatever your rules are, right? So for your best and most consistent profitable setups, and you get to know that over the time. As you're not experimenting with too much new stuff, you really learn to look at what's the most effective for you. So anyway, that's all I got tonight. Appreciate the request. Wait, let's see. Do I have anything else here? No. I think that's it. And hope you guys have an awesome trading day tomorrow. I'll post a game plan tonight. And of course, I'll let you know if I see anything good setting up tomorrow, for you to take a look at. So Appreciate you guys for watching, and I will catch you guys tomorrow. All right, have a good night.